Dear trading friends, today there's another update video on Bitcoin and the company and possibly also Solana. We're doing a weekly wrap-up video, taking a look at some level 2 data to see where whales have positioned themselves, which is super interesting for us. Where could there possibly be liquidations as a result, and where do we see, based on technical analysis, the possible support or resistance levels? First off, let's stick with Bitcoin purely from a technical analysis perspective. If we go in with my Fibonacci trading strategy, at this point we still have the 0.5 Fibonacci level as support, and that's also the reason why I'm long. But of course, I'm doing all of this with sensible risk management that I've set aside for myself, so I don't risk losing my entire position. Because at this point, you can also see that these exact two candles, which were very strong support, are still acting as support right now. What I don't really like on the weekly chart, and I want to share this with you as well, is that we still have a bearish divergence that remains intact. And it's actually quite clear at the candle closes, because anyone who is familiar with divergences or RSI, if you include the RSI in your analysis, knows that this is indicated at the candle close. Because an RSI doesn't show a candle high, but really only signals at the candle close. And we still have this bearish divergence, which is still playing out here. From my perspective, looking at the long term, we have a possible support here at the 0.5 Fibonacci and 0.618 Fibonacci levels. The support also comes from all the volume we have here. If we look at it, the last bearish divergence that was exactly like this, where we had a correction, then a recovery to a new high. If we go in here and move this indicator down there, so with the RSI, we move it ourselves. We also had a bearish divergence here. The price made a higher high, while the RSI made a lower high. How far did Bitcoin correct after this divergence? And that was exactly to the 0.5 Fibonacci level. I'll remove this here again now. You can see here, right at the 0.5 Fibonacci, there was a period of consolidation, then it wicked down a bit more, provided a bit of a recovery, which of course drove many people into long positions again, but then a lot of long positions were liquidated, and after that we moved up. And now if you saw it just before, we have a very similar situation. The bearish divergence I just showed, and all of this together with a correction towards the Fibonacci level. And that's the reason why I'm still long right now. We'll also go through the positions in a moment, and where I'm continuing to build my position and still don't have a stop loss. I'll only set the stop loss later when I say, okay, we're really going lower and I don't see any more chances. The VPVR also shows us, of course, to include this upper area here. That's exactly what I mean. So that we're right at these strong order volumes. I probably need to move a bit to the right here so you can see it in my video, where we have a very strong volume area, which can still serve as support for us all the way down to the 0.618 Fibonacci. That's exactly why, and let's go through the orders again, I personally still have another order placed there. As you can see, the trading performance has been excellent lately, but with Bitcoin, I currently have an open long position, still without a stop loss, and I will double my position down here at the 0.681 Fibonacci, and then I'll see what happens next. But by doubling up, I pull my average entry price into this area here, where you can also see this volume bar again. And this is exactly what makes it super interesting for me to open another order. If we look at this in the liquidation heat map, at this point in time, a lot has been liquidated above us on the weekly chart. So it looks very exciting. With a 3-day chart and a 1-day chart, we should also be cautious. I'll show this again on the liquidation heat map at Coin Class in Model 3. But what we're seeing here now, 3 days, that was Friday, and then here we have Saturday and Sunday. At this point, a lot of people have just entered long and short positions, even though we're consolidating very strongly. A lot of new orders. For me, this could once again mean strong volatility on Monday with the market opening, so that we can fish for both long liquidity and also take out the short liquidity here. Then it gets interesting to see how things will continue, because on a weekly basis, we still have a lot, almost 12 billion lying above us, up to a price of about 110,000 US dollars, and that's very significant. You can see it here in the volumes, which are around 105,000 to 106,000 US dollars. And the next one is roughly at 108,000 US dollars. But we must not forget what's also very interesting below us. Almost 5 billion, which by now also lies below us on a weekly basis. We can also see this on my daily chart, how over the past day, both above and below us, liquidity has built up evenly. And we must not forget that. Sunday is always really hard to trade. For me, I'm currently positioned long-term when it comes to my trade, which is why I'm also looking at the daily or weekly chart for my long position, which I'm including here. But if we now go into the Model 3 liquidation heat map for Bitcoin. And that looks very interesting. Let's switch to a 1 month view here. That's roughly where that big record crash happened. And we can see that on a monthly basis, there's actually something up to 117,000 US dollars. What's at the 117,000 US dollar mark? What could be interesting here? IME, technically speaking with the SMA, do we have the possibility of a rejection here? Or where exactly is that located? In this case, that would be our top up here. So there was massive shorting here. I'll turn this off now, and this as well. If we go in there, that's a strong rejection zone that we definitely need to break through to the upside. If that happens here, then I could imagine that we might see new highs again. But you can see here, that's roughly between 115,000 and 116,000 US dollars. And just above that, we see that the short liquidity is at 116,000 to 117,000. Which is why I could imagine that if we get a recovery, a stronger recovery, we could move into this area. And then it gets interesting to see what happens here. At this point in time, it's also very, very important for me to pay attention to what I'm watching and where I'm looking. When I look at the daily chart, I'm preparing for a short position. Even though I'm currently bullish and also have an open long position here in Bitcoin, for example, which is just under $24,000, and in Ethereum, I currently have a smaller one, which is just under $5,000. But here too, I'm ready to add a bit more. But why am I still considering the possibility of a short position here? As I mentioned earlier, at this point, we're simply continuing this bearish price structure with a new low. Here it was the candles. There was the candle low, which means the candle's already closed below this level. In any case, it's a bearish structure that we have, even though we currently also have some support. But what I still see here for myself as a possibility for a short position, because I'm long here, but if we now move up, and I'm too bullish and don't at least try to hedge my position with a hedge short in case we keep falling so that I can take profits again here, then I wouldn't see the market as neutral. Because even though I'm overall bullish, I see a bearish structure and would use these opportunities for myself. What does it look like now? How would I do it? For me, it's like this. I would open a short position here, in this case right here. We'll compare this in a moment with the liquidation heat map and the whale orders, because that's where it gets really interesting. Around $107,000, $107,720 is the first position. And the second one, if that doesn't work out, I have at the 0.618 level with the same stop loss, which would be placed exactly here. I'll place these orders now as well. Technically speaking, it's very interesting. We have a support level here. I think you can see it a bit better on the 4-hour chart, if I'm not mistaken. Exactly here at the 0.681, and also the 0.5 Fibonacci was a very good support level. We'll also quickly add some lines here, so you can see it a bit better visually. That's exactly what I mean as a possibility. And this down here, if we extend it a bit, and maybe let's go back to the daily chart and see what happened here before. These are now very interesting zones. And you can see here, it was also very interesting in the past, very strong support levels. What happened here could now lead to a rejection. And further up, you can also see that we had several rejections here as well. And I would also use that for myself to enter a short position here and then take my profit down here again. That would be my preparation now. I know we want a recovery, but we must not forget this. Let's move on to the large orders and whale trades. I need to go back to Bitcoin here, because whale analysis is of course extremely interesting. You'll also get an update video from me on this because things have changed a bit. I have that in my playlist for those who aren't familiar with it yet. By the way, feel free to subscribe. Let's hit the next 1,000 subscriber milestone together. Check out the first video, 100% passive income on autopilot. But what's super interesting is Trading Liner, Stepper Steps, and Profit Radar. There I go through all these individual tools that I share with you, which you can use for yourself. And now there's an update on that. Now with whale orders, we can actually filter things out. For example, I only want to see positions that are interesting to me, those larger than 30 million US dollars. And where are those located? And that's now really, really interesting for us, especially when I zoom out a bit here. Where do we have large positions? Here we have 35 million and here we have 101 million. You can move up here, but what's even more exciting is that you can now see this displayed directly with the prices. At 101,600, we have almost 200 million that have just been placed into a long order. You can see it here, 0 minutes ago, so not even a minute. It just came in very recently. That's exactly this right here. Almost 200 million have gone into a long order here. But at 110,000, there are 100 million waiting on the short side. And you should check in on this regularly. Of course, this can change at any time. But does it make sense to join in with a whale who has placed a short order at around 110,000 US dollars for the past 4 days? Maybe to place an order alongside them? Where would that be? The 110,000? And that would be roughly at the 0.681 Fibonacci level. For me, for example, this is a confirmation of the 0.681 level, provided this order actually stays in place. Another opportunity for a great short situation is the second one at 107,700. US dollars, if we look here, is there anything else there? At the moment, actually not much. If we go down a bit and look at the 10 million US dollars, there really isn't much at 107,000. That could be a sign that the 0.5 Fibonacci entry might not even trigger. But we're waiting for the market opening, and that's important because at tomorrow's market opening, we'll see how many new orders come in. But this is now a sign where I would say that this could happen in the near future, especially with the large orders, where we have a reversal to new short scenarios, or possibly even down here at 101,500, where something new has just come in, which is very interesting, and also at 99,050 with almost 100 million US dollars. And that's always important to keep an eye on. And that's why I want to say again, right now entering a trade purely based on luck. We're taking 3 days, that's the weekend being shown here. You can see that again here very, very clearly. Now I'm moving the lever a bit further to the left. There are so many liquidations lying there. You don't want to just gamble now and say, okay, I'll go long because I think we're going up, or I'll go short because I think we're going down. Not when there are so many liquidations above and below us due to the consolidation, where apparently a lot of retail has also positioned itself and is now entering without much probability into a situation or is steering into the other direction. That's why I'm holding off here for now. And I'm not making the smaller trades yet until I see what gets liquidated first, and then I'll prepare for the next trades. If we compare again now with the IME and SMA, I'll turn that on here now. On a daily basis, we can see that despite everything, at the 0.5 Fibonacci, if we move up now, there would still be a possibility for an initial rejection around 108,000 because we have the 200 EMA here. That could be the rejection to the downside. If not, you can also see here that the SMA would be the next possibility, which would be very much in line. For me, the current time is very positive. 2-day chart, simply the support that we have. Otherwise, we see that if we go further down, we can also take another look at the 4-hour chart. Where could it go? So it's the daily chart and the 4-hour chart. If we recover now, the 0.618 Fibonacci that I just mentioned would be very attractive again. A recovery into this area could mean a rejection of the IME and SME. And that's definitely something we should keep an eye on here and not just blindly. Then we think we're just going to keep rising endlessly because what we still have here, maybe we'll see it if we turn on Big Beluga, is an order block here. This order block is very, very interesting. It's not displayed here, but you know what I mean. If you have a bit of technical knowledge, you can draw this in nicely here. And that's exactly a consolidation zone we had before the massive breakout to the downside happened. And why can you see that so clearly? We accumulated heavily during the sideways phase, and then there was a strong volume candle that pushed us downward. And that's exactly why this zone from $109,000 to $110,000 could become incredibly interesting for me, so that we could rise here and possibly face a rejection. But now let's continue with Ethereum. Ethereum is also very interesting. Here too we have similar scenarios. Again, I haven't done anything different here except use the 0.5 Fibonacci for myself. If we go in here, let's let it load for a moment. From this low to this high, the first 0.5 Fibonacci was indeed a stop loss. But as you can see, the second one actually had a spot on trigger here. So it entered very nicely and is currently still in profit. But here I see similar opportunities on a daily basis. If we now, let's zoom out again, or rather I'll switch to another chart. You can see it much better when I remove this and we go to the daily chart. The daily chart is of course very, very meaningful for the current structure. What you can see here on the daily chart, which isn't so great, is that we're currently struggling at the SMA and are often pushed downwards. If we can't hold this, I could actually see lower prices. But if this becomes support, then I still see the 3,600 as very interesting and 3,700 as well. We'll see that in a moment on the liquidation heat map, because quite a bit of liquidity has built up above us here, and I've already prepared that. Let's go. Where do I have it? Here it is. You can see that in the last 48 hours, which are now open, there's $3,633 where quite a bit of liquidity is lying above us. And that would be roughly this area here, where we have a bit around 3,600, where we could still see an increase, which would also be very, very optimal at this point in time. Because if we close above that and actually find support at the 200 EMA, that would be very, very ideal. But where I see the next possibility, and we mustn't forget this here, we have a strong rejection zone here. And we have another rejection zone here, which is going to be very interesting. On the daily chart, for me, it's also about Ethereum here. You have to zoom out here to even notice it. We also still have this bearish structure intact here. And don't forget, we're no longer making higher highs here, but still lower lows and lower highs. And that's a bearish structure. We don't know where this will end and when we'll see a reversal here. At this point in time, it's important that we first have to break through the 4,300 level on a daily basis in order to break the last lower high to the upside and potentially establish a bullish structure. And we definitely need to be careful about that. We're only talking about the daily time frame. On a smaller time frame, of course, this can happen much sooner. But for me, even now, I'm long on Ethereum. But take a look here at these zones I marked earlier. If I now draw the Fibonacci again, down to the low, you can see how significant they are, especially the 0.5 level. Even more interesting is the 0.618 Fibonacci here at 3,800 US dollars. We have exactly in this zone, which was really interesting to me. Let's also look at the past here. What happened here? We had rejection here, rejection again. We were rejected 3 times. Then a few more candles here, rejection. And the lower part was also interesting before we broke out upwards again. Let's look again at what happened in the past. You see how strongly this acted as a key level in the past as well, and we can even go back further. This is from March 2024, and it was similar here too. Strong rejection here, strong consolidation zone, another rejection, then it went down. And these are not coincidences. So now, as of today, we have a very similar situation here where we had support and are now below it. But I will also expand my Ethereum long position due to the bearish Fibonacci levels on the daily chart. Especially interesting for me is the 0.618 level. In contrast, of course, we can look at the liquidation heat map. 3,400 to 3,500 is exciting. We're only talking about the last 3 days now. Let's take a quick look at 1 week. We're doing all of this with Model 3 as well. Up here, it's really heating up. The 3,500 to 3,550 range is super interesting at the moment. Right now, 3,500 to 3,550 isn't actually that significant because on the daily basis, there's not much technically relevant there. Of course, we also have to look further ahead and check the 2-week and even the 1-month view. And here you can see that in the long term, the $3,900 to $4,000 range is very interesting. $3,900 to $4,000. That's all in the area where we have strong volume. But if we also look at Ethereum on the 2-day chart, since we included the SME and IME earlier, at the moment, that's a very strong support zone, which is still holding for now. However, we have a fair value gap here, and it's a very significant one. That's already being indicated by Big Beluga, the indicator, that's what I mean. And the fair value gap, these things aren't coincidences either. The middle, which often gets filled, would be at the 0.5 Fibonacci level. That's why I'm really preparing here with short orders. If that doesn't work out, it's no problem. Guys, I've already prepared myself with my long orders on Bitcoin and Ethereum. Those would make very strong profits. And if we keep going up, I'll just take 2 small losses. But the long order would make up for everything if we keep rising. And that's my current approach. And as I already mentioned in the last video, if I close everything out again on Ethereum, what I also want to add in conclusion is my long-term entry, which I shared with you and where I'm currently long. And we must not forget, even if we close out here, these confluences are just very strong. Just take a look at this on a 2-day basis, what I just had on the chart. You can really see how valid this level is for a possible short, even if we don't want that. But for me, it's very appealing to take these trades because we have a clean bearish structure. But what I see with my long position here, my entry, which I have here and which is currently in profit, I showed this again in the last video, because if I include the complete low and the complete high here, I actually still see the possibility that from the complete low to the complete high, the 0.618 would be down here, which would be this support. However, at the current moment, that would correspond to the 0.786 Fibonacci. I've already placed a long order here. On Ethereum, you can see it here, that's at 2,730 US dollars, which is exactly this area here where I say, if this doesn't work out and my stop loss gets triggered, my next long entry will happen here. And if we really do fall that far down, I'll still speculate on a recovery in between, because then another bearish possible Fibonacci level could be triggered, allowing us to go further down. That's why I'm very neutral. As you can see, whether it's long or short, I try to take advantage of it for myself. And the next short entry is actually my next trade, right? Since the video has already been long enough and we don't have such positive events at the moment, we hope that maybe there will be a bit more next week. But we'll leave it at that for today. The Sunday update video is finished and we'll see each other again on Monday. Maybe a live stream, but in any case, there will be an update video when there's a bit more order volume in the market again. Until then, bye-bye.